So if Bitcoin is to software, well then Hyperliquid is to semiconductors in terms of how it's been trading. And I think it does reflect sentiment around AI in a way, and just that kind of feverish investments, being made ahead of what has been a pretty rough corrective phase. But that corrective phase isn't a breakdown. It does reflect a loss of upside momentum that is meaningful. But at least right now, it's not going to be long term oversold in the same way. But there is an oversold reading on a weekly basis and naturally on a short term basis that could allow for a corrective low.
Hi, everyone. Welcome to another episode of Bits and Bips, the interview. My name is Steve Ehrlich. I am the head of research at SharpLink, and as always, your host. We've got a really exciting show for you today, but as always, before we begin, just a few brief bits of information. One, nothing that you see or hear on this program is financial or investment advice. For full disclosures, please see unchainedcrypto.com/bits and bips. And second, just want to let all of you know, if you haven't yet, Bits and Bips, the interview, and Bits and Bips have moved on to their own dedicated channels on the Unchained Podcast Network. So if you want to make sure you don't miss any episodes, please be sure to subscribe wherever you listen or watch our podcasts: Spotify, Apple, YouTube, X, etc. And with that, let's hear from one sponsor, and then we'll get on with the show.
This episode by Cape, America's privacy-first mobile carrier. Same premium service you'd expect from any other carrier, but designed so your number, your location, and your data actually stay yours. Get 33% off 6 months at cape.co/unchained.
All right, welcome back. So really excited to have my guest today. She is a repeat guest. She's Katie Stockton, a CMT and the founder and managing partner of Fairlead Strategies. Welcome, Katie.
Thanks, Stephen. Good to be back with you.
Yeah. Really excited to have you on this week in particular because as I know you've been watching and plenty of us in the industry have been, crypto's going along slowly, calmly. And that's not typically its MO, especially in a world where yields are rising, AI stocks are continuing to go through the roof, major indices keep setting record highs. At the same point, we get worrying inflation prints and a lot of different things going on. Crypto is supposed to move one way or another, but hopefully up. But for the most part, it's staying still. And I think you're the perfect person here because of the way you look at the market to sort of explain what you're seeing, why, and I guess most importantly, when it might end. So let's get right into it. Let's talk about Bitcoin. I know that you've given some comments recently that you think the bottom is in, and we are going to we are going to see a bit of an upswing. Perhaps you could walk us through what you're saying.
Of course. So obviously the crypto winter has been ongoing, and with the downtrend, we now have a long-term oversold indication, and that's it's measurable. It's based on the monthly stochastic oscillator that we use. So it's a technical indicator, pretty popular, in fact, and it's been oversold now for a few months. And that's something that has us sort of perk up, right? We pay attention when oversold conditions return, but they themselves are not enough of an indication of a turnaround. What we like to also see is mostly twofold, I would say, which would be improved momentum. And when I say that, I mean more than just short term. And then also we have another indicator, a suite of indicators, in fact, from DeMark. The DeMark indicators are helpful in order to enhance those oversold conditions and vice versa. And they do have some signs of downside exhaustion presently for the monthly Bitcoin chart. And they would suggest that at least for another 3 or 4 months, we could see some stabilization, if not a longer term turnaround.
Okay. So let's break this down a little bit more using the chart that we just had up, if we can get it again, because there's a lot of information here, a lot of different charts. And I know when you and I have spoken in the past, it's never just one reading. It's never one indication. It's never one particular time horizon or time scale. So could you just maybe walk us through a little more, like precisely like what you're seeing, and I guess like what you would need to continue seeing for your conviction to persist or get stronger.
Of course. So you can see this is a weekly bar chart of Bitcoin, and you can see the downtrend, of course, series of lower highs, lower lows. But what you'll also notice is that there is a long term support zone nearby, and support can be measured many different ways. We look at previous peaks and troughs on the chart. So you can see previous troughs or lows have been captured by this zone. We also like to use Fibonacci retracement levels. It's something that's fairly common in technical analysis as a discipline. And it's a way to understand where buyers may step in based on the Fibonacci sequence, which is maybe a topic for another webinar, but quite helpful, we have found. And then also just things like the cloud model, the shaded area that you see can also be a support gauge. But of course, right now it's resistance, longer term resistance and overhang. And it also reflects the downtrend that has affected Bitcoin for some time now. But with all of this, we have the long-term oversold indication. So that's more visible on the monthly chart. So we use stochastic oscillator on the monthly, on the weekly, on the daily, across time frames to help us understand what's going on here. And because we had not only the weekly oversold, which would be more intermediate term in its takeaway, but then also the longer term oversold on the monthly, taken together, those would suggest that we have a potential major low in place.
Yeah, I'm curious. I know in some of our previous conversations, we've gone back and talked about historical precedents. And although crypto is not very old, especially in terms of the world of the financial system, it's gone through many cycles in its brief history. Are there one or two times where you've seen a similar type of oversold situation? And are there any similarities? Typically, like what is the catalyst that helps it break out? Is it something exogenous that happened, like outward stimuli, or are there signals in terms of momentum indicators or volume, something like that, that gives you a sense that even if perhaps a match gets lit, that there's enough tinder there to really keep it going?
Yeah, so what we like to see is pretty specific, in fact, in terms of an oversold condition giving way to then what we call an oversold buy signal. And in our work, that occurs in part when the stochastics, in this case on the monthly, would turn back above 20% decisively. We feel that that shows enough of a momentum and sentiment shift to then suggest that it was a major low already that's in place. These indicators all have a built-in lag to them, but that's okay because we're trying not to get caught up in the noise, but rather identify bigger, more important inflection points.
Mm-hmm.
And with that, we feel that the indicators generally keep us on the right side of the trend. And also help us to know when the probabilities are in our favor, right? So if we're thinking about, being long Bitcoin right now, we know that we're fighting against a downtrend, right? That downtrend is still visible. It's still evident in the monthly indicator, certainly, and you can just see it in the slope of the 40-week moving average on the chart. And that is our context, right? So we know we need to have stricter attention to risk management. So all of these things are just designed to give you more success in your investment decisions. There's not any way to predict what's going to happen tomorrow, what's going to happen a week, a month, a year from now. But we can put those probabilities in our favor and therein manage risk and also succeed in terms of riding those trends.
Yeah, and it's interesting. I know that you don't obviously you spend time paying attention to what's happening in the world of crypto, and we're talking about Bitcoin right now. Although your investment decisions are primarily based on what the charts are telling you, but there is a lot happening. The Clarity Act, and while that doesn't have as much direct relevance for Bitcoin as it does other assets, I mean, it's still a big sign of legitimacy should it get passed. And then within Bitcoin itself, it's been a difficult week of news because of the hacking of seed phrases for one of the oldest and most established hardware wallets, which is supposed to be ironclad security, a 9-figure theft that I don't think is entirely complete yet. So we're seeing a lot of movement into ETFs, Bitcoin ETFs in particular, but it's not the type of movement that I think people necessarily want to see. It's not institutions going in, it's people rolling out of these hardware wallets into ETFs. So that's just a long way of saying that there's a lot happening right now. And we're also in a world too where we're getting an inflation print tomorrow, and depending on what happens there, we already get the sense that the FOMC wants to raise rates, or is I guess perhaps prepared to, depending on what how the inflation rate comes in. That could also lead to higher rates, which could be difficult for Bitcoin. I I'm curious if at all, just given all these things that are happening around the same time, does it factor into your models, or is it really still just the charts, and you assume that those factors I mentioned are sort of embedded within the volumes and flows that you're seeing?
Yeah, I mean, listen, like if it factors into price, then it certainly factors into our models, which really only consider price. And that is the nature of technical analysis. It's trusting that all the information out there, except for the new news, right? So maybe Clarity Act could be considered new news once it finally hits, but it's widely anticipated, right? So it depends on what we're talking about, but it's assuming that all that known information is baked into the price already, and how the sort of dynamics of supply and demand are impacted by all of these external situations and setups and asset classes. So we do keep it very simple, really focusing in on price and trend and momentum. It's not to say that that's the only tool that you should have in your toolbox. It's our tool primarily, but we also think that with any kind of asset class, that you should have a fundamental case that's strong to be there. You should have a catalyst, both technical and ideally fundamental as well, to continue to hold on to that exposure, and that you should use technical analysis charts to help you manage risk and for market timing purposes. And when you come into these events, right, the assumption is that the chart's not going to tell you what the reaction will look like, but it will tell you what the setup would favor coming into that announcement, right? So as we come into more economic data that gives us more color around inflation, I would argue that we have a condition for Bitcoin that's more oversold, and that's more likely to allow it to remain stable even in the face of bad news. So I think of it more in those terms. And then we are reactionary. We're very happy to react should something change in response to that announcement. And that could come in the form of a breakout or a breakdown primarily, or in terms of a new signal from our technical indicators. So those are the things that we really either take issue with or get excited about.
Yeah. One more question, and then we have to go to another break. But within the context of this conversation, you're very much putting your money where your mouth is, because I know that you just launched a new ETF that is designed to sort of protect during downward momentum, but really, excuse me, ride upwards momentum as much as possible. Maybe just talk a little bit about that, but in particular, like why you structured this this vehicle this way, because at this point, there used to just be spot, and then there were covered calls. I mean, there's a whole wide variety. There's mixed assets, but you saw an opening. So I'd love to kind of get your thoughts.
And it is very much aligned with our methodology. This is a long only Bitcoin strategy. It's called the Amplify Fairlead Tactical Bitcoin ETF. The ticker is BNAV or BNAV. And we feel that it's really using technical analysis is one of the best ways to have an active strategy that can compare favorably to Bitcoin buy and hold. What we're trying to do primarily is ride that upside momentum when it's strongest, with a leverage position of about 1.5 times what would be equivalent to buy and hold. But most of the time, we'll be sitting with a lower exposure of about 70% Bitcoin, because there's these prolonged consolidation phases. There are crypto downtrends. And we want to be underexposed in those environments, because that has the potential to limit the big drawdowns that we have seen historically. So that's the design. There are a lot of ETFs out there that would claim to be active, but truly they're active more in terms of their structure. They're using covered calls, et cetera. Whereas this is, to our knowledge, at least the first trend following momentum based ETF that trades Bitcoin.
Gotcha. All right. Well, we have a lot more to talk about, but before we do, let's take one more break to hear from another of our sponsors.
If you own, your biggest vulnerability isn't your wallet, it's your carrier. AT&T, Verizon, and T-Mobile have been breached again and again, and SIM swaps are still one of the easiest ways for attackers to drain accounts. That's where Cape comes in, America's privacy-first mobile carrier. Same premium service, but Cape rotates the identifier on your SIM every 24 hours, deletes your call and text metadata after a day, and protects against SIM swaps with a 24-word recovery phrase that only you control. You also get 2 middle-to-end encrypted secondary numbers for banking and signups, so you stop handing your real number to every app that asks. Go to cape.co/unchained and use code UNCHAINED for 33% off your first 6 months.
All right, welcome back. So I'm talking with Katie Stockton, founder at Fairlead Strategies, and we're breaking down technical charts to wonder when crypto is gonna get up off the mat and start acting crazy again. We just went through Bitcoin. Let's talk about ETH now. When I had you on a few months ago, you mentioned how ETH was sort of set up to outperform, which, given that my main job is at an ETH treasury company, that was certainly music to my ears. ETH had a really good July, but in general, it hasn't really had that big breakout performance quite yet. I understand that there's a lot of mitigating circumstances and factors, but I'd love to hear from you. What are you seeing on the chart as to the reasons why?
Well, we have to sort of isolate absolute terms and relative terms. In absolute terms, Ether is in a downtrend, much like Bitcoin, but this is a cyclical downtrend that you could view within the context of a gradual secular uptrend. There was some very, very long-term support based on a trend line, an uptrend line, that held in this recent low that we've seen from ETH. And we feel that that's, could be the first step towards a major low. And it shares the same types of indications of downside exhaustion, actually a little slightly different, but with the same takeaway on the monthly chart. And of course, we had an oversold retest on the weekly chart and some improvement in those intermediate term indicators as well. So the takeaway is the same, that this could be the beginnings of a major low. We're not totally convinced that the spacing phase has fully culminated. We really need a breakout from both Bitcoin and Ether to suggest that. So that would, for Bitcoin, that would be above the 200-day moving average, I think would really solidify that just as a turnaround. But that breakout is ultimately what completes the basing phases. Now, if we were to go back to the ratio, which we do every week in our research,
You're talking about the ETH Bitcoin ratio?
Yeah. So we look at it Bitcoin over Ether, and we find or have found that the long-term trend has generally favored Bitcoin, of course. But just this year, and since we last talked, I believe in February, the performance has been in line overall, but with some pretty good swings in both directions. So, early sort of, I guess in the first quarter, we did see a short-term phase of outperformance that was sort of given up, but now we're seeing a recovery that has brought us back to sort of an inline takeaway. The recent recovery in Ether has taken the ratio Bitcoin to Ether below its 200-day moving average, the rising 200-day. So it could be the start of a more lasting shift, again, in favor of Ether. I think it's still too early to say that this is a decisive turnaround, but it has the indications of that. So I think there's promise for it. I don't think it's a decisive reversal as of yet, but we have those indications.
Okay. So let's go back to the ETH chart. Because I want to ask you a couple of follow-up questions there. You mentioned how there was a bit of a difference in the types of lows that you're seeing between Bitcoin and ETH. I think I don't want to misquote you. You're mentioning how it's kind of like a secular low as part of a general uptrend. Maybe I got that wrong, but could you just maybe elaborate a little more on the differences that you're seeing between the Bitcoin and ETH charts?
Yeah, of course. So, of course, the secular uptrends there for both of them. ETH had a cleaner trend line, a cleaner gradual trend line that we used as support. Whereas support for Bitcoin, we were using different metrics. So the way we're deriving support is different for one, and then also the signals that we have from those DeMark indicators that I mentioned are different signals, but again, pretty similar takeaways that we should see some stabilization that would last several months, if not longer. And so we have that takeaway from both charts, but slightly different signals. And I think it's a matter of, like, generally speaking, they trade directionally in step, not perfectly. We have seen some dispersion that it's a bit more pronounced outside of Bitcoin and ETH, I would say, but that dispersion can actually provide opportunity, because I would say that when we have certainly a crypto bull market and come out of this in earnest, that's where you can find real potential from all of the above.
Yeah, and what do you mean when you say a major low? Is that a particular technical term, or I assume, or does that mean like the bottom isn't? I just want to make sure I understand. And
Yeah, so it'd be like a cyclical low. So we always speak in our research cyclical versus secular. Secular would be multi-year, even multi-decade in terms of duration for a trend, whereas cyclical would be what we've seen on the downside, which would be months to maybe a couple of years, I'd say at longest. So it's kind of the cyclical down move
Mhm.
would give way to then a cyclical up move or trading range. That would be a major low in our work. There are certainly ways to take advantage of intermediate term lows too. So we've actually been constructive in our research from an intermediate term perspective to honor the momentum shift that we've already seen from
Mhm.
both Bitcoin and Ether. So you can obviously have these counter trend setups that are favorable as well within that context.
So we don't necessarily want to hit a major low, but quote unquote we kind of do, because then at that point we can sort of hopefully bounce off of it back into a new secular uptrend. That's
Yeah, I mean, the good news is that we may have already seen that major low is the message. Yeah.
okay. All right, great. And I want to go back to the ETH Bitcoin ratio chart, because I just want to drill down on that a little bit too. It looks like it was kind of straddling the 200-day moving average line. And I mean, obviously that is a very important indicator, long-term indicator. It looks back retroactively, but at the same point, it's much more stable, I guess, constant than the 50, 20, 10, whatever. And you're the CMT. I am not. But it's the first time that the ratio is at that level for in months, after being above it for quite some time. I know we don't have the same types of metrics that on this chart as we do with some of the others, but I'm just curious if you have any more insight into kind of what to expect next, because it is interesting to me that it seems like it's very closely straddling it, almost like moving in a parallel fashion, slightly under. And uh, to me, that signals that there could be some type of movement one way or another.
Yeah. So what you're seeing there in a way is a consolidation phase. And then the question is that consolidation a continuation
Mhm.
pattern or a reversal? And we don't know yet. But what I will say is that the breach of the 200-day, which was decisive enough, would raise the possibility that it is a continuation pattern, meaning that we should see more outperformance if it's resolved to the downside by Ether. And so we can't predict it, but I would say that, we are seeing some reaction to oversold indications. But if we were to see both Bitcoin and Ether complete their basing phases or, advance further off of their lows, I would imagine that would see, this ratio probably neutralize for a while, a bit more of an extended neutral period. As early stage turnarounds, you tend to see Bitcoin be the first one that people go back to. But then once it's more established, then you see the altcoins really kick in and benefit from that sentiment shift. So those are the types of behaviors that we'll watch for. But instead of predicting the next move in the ratio, if we see a breakout or breakdown, we can certainly respond to that accordingly. we also have a way to look at the rotations amongst the other altcoins to see if like collectively we have a shift to risk on versus risk off. And we like to use that from a short-term perspective to help tone our research about the sort of absolute trend. And so we'll even look at just a 10-day view of the rotation amongst the altcoins relative to Bitcoin. And you can derive some good information from that.
Have you looked at the most recent one? Is there anything worth mentioning?
Yeah, I mean, we have several altcoins that were in what we call the improving quadrant. So, and again, this is very short term, so it might not be relevant by the time somebody listens to this talk. But the likes of Solana, we have had some rotation that is more risk on in the space.
Yeah, I know Solana's had a good week. It's up 5% or so in the week. And I know we're going to talk about a few of the other alt majors in a second, but I always find the ETH Bitcoin chart pretty fascinating because I even back when I was at Forbes, I would look at it in an unscientific way to get a sense of sort of like market attitude towards risk, and in particular what that can mean for associated altcoins. I know some of the alts, especially not even counting like Solana or XRP, like the major alts. I mean, they've kind of, I think, gone a bit of the wayside with the rise of like prediction markets and AI stocks and plenty of other ways to express like very risk forward attitudes. But I'm curious what's going to happen with the future of that chart, because I've long said that, I mean, for one thing, like Bitcoin should not trade alongside in conjunction with ETH any more than gold should trade with Google or something like that. And today, so I mean, what that means is I don't think the chart should really stay that steady. Like it should go up or it should go down. But like ideally, I honestly, in an ideal world, I almost feel like Bitcoin and ETH should have like a very strong negative correlation with each other.
Yeah, interesting. And I mean, it just like anything, and there's cyclicality to it, right? Where there's even cyclicality to the correlations as of late. I mean, you can look at Bitcoin relative to gold, Bitcoin relative to the NASDAQ 100, and you'll see that these correlations just come and go.
Yeah.
And with that in mind, it's hard to, over a short to intermediate term time horizon, to rely on those correlations for trades or investing. But maybe over the very long term, of which we don't have really a very long term yet from cryptocurrencies, but that's where it can certainly, that the correlations, if they're strong enough, can inform trading and models.
Yeah, it's funny. I mean, I kept being asked to make sense of gold and stocks both going up during the early days of the Iran war, and same reason stocks and bonds would go up like during COVID. It is what it is. All right, so let's quickly go through some of the other big tokens that I know people watching hold and pay attention to. Solana, we started discussing it a bit. As you mentioned, it had a good week. It had some decent ETF inflows. What are you seeing on that chart, if we could put it up?
Yeah, you'll see that it's been sort of advancing from what was a corrective phase. That was kind of interesting. It's been tethered to its 50-day moving average to some degree. And now it seems to be wanting to pull away from it on improving short-term momentum. If it does advance to that 200-day moving average, which is resistance just by the nature of it having like a psychological significance, so many eyes are on these 200-day moving averages, which really are just sort of a lagging gauge of the primary trend. But because they're so widely followed, they tend to have importance. So if we were to see that, that would mean that the consolidation or corrective action has like officially resolved to the upside, and would make Solana look a whole lot like a basing phase, a major low if you zoomed out on the longer term charts. And then we would start to focus on secondary resistance levels. So you can see how it's more just fluid. We want to see, bit by bit, these positive catalysts continue to unfold. Mm-hmm. And in general, we have seen among the altcoins better momentum, so improved short-term momentum, in addition to improved intermediate-term momentum within the context of either an oversold or nearly oversold reading on a long-term basis. So not out of line with Bitcoin at all in the way it's been trading.
Okay. Well, one token that did not have a great week was XRP. So I'd love to kind of get a sense from you of what's happening there.
Well, and this is a good one to pull up because it shows that there is, of course, dispersion when you kind of pick apart the various names within the broader context. And we talk about, when we're talking about equities, like a stock specific move. Well, this is like a crypto specific move, clearly, where Ripple has been out of favor and correcting in a meaningful way still when others have caught a bid or stabilized at least, right? And now Ripple is testing some key support. And what we have found is that when support levels are broken, so meaning for a short-term level, you're seeing a security close a couple times below that, or an intermediate term level, maybe a couple of weeks below that, that becomes something that tends to foster additional downside momentum. So we're always respectful of breakouts and breakdowns, even if it's kind of against our better judgment and what we think should be happening, right? Because it's we don't want to let our biases get it like sort of muddy the situation here. Right now, what we know is that Ripple is testing support pending confirmation of a breakdown, underperforming, and still hasn't really captured that momentum uptick that the rest have.
Yeah, Ripple's always a pretty fascinating one for me. It was bid up exceptionally high, especially during the 2024 presidential election. The company closely aligned itself with President Trump, and I forget the numbers, but I think it went up above $3, perhaps even higher. I mean, it did exceptionally well, and it was actually named in one of the. I think it was initially named in a tweet from President Trump about this national crypto stockpile, the one where he curiously forgot to mention Bitcoin and ETH. I think someone reminded him about an hour later. I mean, Katie, you probably know this. A lot of people listening and watching know that I've been, in my earlier days as a journalist, I've been critical of Ripple, not for the company or what they did or the quality of their technology, but just for the amount of tokens held by Ripple Labs, that primary development team, and essentially like my belief that there was not usage commensurate with what the token was worth. So it does look like it was a smooth, a kind of a smooth downtrend. So I wonder like what that means in terms of momentum to actually like reverse things. I've seen reports that we're also trying to buy more XRP to support the price, but when you see a chart like that, does it suggest that is there a different type of technical setup that would have to, like, does it make confirmation of a breakout harder, I guess is my question, because it looks like compared to Solana or ETH or Bitcoin, all of which are also down this year, this one does seem to have the cleanest slope down.
Yeah, I would agree. I mean, it's a more decisive downtrend, and with a breakdown pending confirmation, of course, it's a bit farther away from coming close to a breakout. So it could end up sort of bringing up the rear if we do see broad-based rotation that favors the crypto market as a whole. We really believe, at least in the equity market, in top-down influences, and to maybe just a slightly lesser degree for the cryptocurrency market. With Bitcoin kind of our S&P 500, right? We want to make sure that we have that trend from Bitcoin on our side before we start going deeper down into the sort of market cap spectrum, if you will. And so Ripple, with the shift that's more decisive than what we've seen, then I would imagine it does stabilize, but it probably remains a laggard, because if we took the trend and looked at it relative to Bitcoin, of course, you know what you would see, right? And you want to respect the trends both in absolute and relative terms.
Yeah. Okay. All right. Let's touch on one more token before we start the wrap up. Hyperliquid. It's been the breakout star of, I don't know, I guess the last 12 months or so. But it is down, I think, about 28% off of its June high. Granted, Amina better than anyone. Just straight upward momentum is never sustainable, and Hyperliquid remains, as you can see on the chart, doing extremely well. But I'd love, just given how this has like a different type of chart, different dynamic than the other tokens that we talked about, I'd love to know what you're seeing here.
Well, what I'm seeing is something that looks just like the AI trade and right, or a semiconductor stock.
Mhm.
So if Bitcoin is to software, well then Hyperliquid is to semiconductors in terms of how it's been trading. And I think it does reflect sentiment around AI in a way, and just that kind of feverish investments, being made ahead of what has been a pretty rough corrective phase. But that corrective phase isn't a breakdown. It does reflect a loss of upside momentum that is meaningful. But at least right now, it's not going to be long term oversold in the same way, but there is an oversold reading on a weekly basis and naturally on a short term basis that could allow for a corrective low, right? Something that it has maybe shorter duration than a major low, but one that still could be tradable. The good thing about the chart is that it can help you identify where that support is in order to have a defined risk metric, right? Because you know that if it takes out that trend line, or maybe you want to give it more room to the 200-day moving average, well, then risk is greater that this is actually more than just a correction and something that is more the start of a cyclical down move. So you can see this kind of completely different price action. It is rare, but you can see it from the market, and there is information there. The information is probably better for a fundamental takeaway than a technical takeaway, but I just think it's fascinating how it's traded.
Yeah, I'm curious. I was trying to look up quickly at the top markets on Hyperliquid to see like why there is that sort of that what appears to be a very high correlation. I know there's like SpaceX and they have SPY futures and or markets, and they have oil and other stuff too. But yeah, that's certainly it certainly rings true. And
Yeah.
I'm really curious what's going to happen with Hyperliquid, because I mean I'm not going to call them unregulated because I don't think that's true, and I want to really look into that before making a statement along those lines. But at the same point, it is offshore, and I do believe they geofence U.S. users, so they can't really use the platform. But we are moving into a world where the major indices are facilitating 24/7 trading. These types of perps in any market, either through prediction markets or just through exchanges like Kraken or Coinbase or whatever. I mean, they're going to be offering regulated versions of these markets. So for Hyperliquid, uh, I know this isn't necessarily how you look at things, but competition is going to heat up, and I wonder. I feel like they're going to be facing the same type of challenge that Poly market faced with Kalshi and some of these other like US based markets. Poly market has continued to remain large, even though it's been surpassed, I think, by a couple multiples in terms of Kalshi in terms of notional open volume. But uh, I don't know. I guess my question is like, does any of that concern factor into how you would read a chart like this, or is it really still just looking at the core momentum factors, the technical metrics that you pay attention to?
Yeah, I mean, you're talking about sort of headline risk in part, and that's something that is more prevalent for some coins. It's more prevalent for some asset classes, i.e., crude oil prices right now, right? So
Mhm.
that'll come and go, but to me right now, that would be just all the more reason to have a systematic way to manage risk. So if you felt, that Hyperliquid, while it has these ongoing fundamental issues, if nothing's acute,
Mhm.
you can still trade it for a relief rally, but you would want to obviously have just that defined risk metric, whether it's a percentage based stop loss, watching it relative to a support level, only owning it when the MACD indicator is positive, whatever it may be. There's just ways to do that and to do it without the biases that could come with reading the news and digging into those headlines. So for sure, it's overall the takeaway would be that this is a nascent sort of asset class too, and therein subject to more risk and bigger swings. But then the other side of that is that with volatility, there is opportunity. So I can see why people are eager to trade these instruments.
Mhm. So let's finish by talking about volatility, because it's two very different pictures. If you're looking at crypto, I know you talked about BVIV. Actually, I'm actually blanking on his name, but I had him on my show last week actually to talk about BVIV. and sort of how it's stuck in like the mid 30s, whereas volatility in indices continues to remain high, and there's been a big trend of, I would say, people irresponsibly putting money into highly leveraged ETFs. Obviously, not putting you in that category and what you offer, but I'm talking about like people in Korea putting, like, just dumping their life savings into these like 2x ETFs, etc., and then watching it all go away. And I'm curious, like, how you factor in like those two different how like those two different sort of worlds when you're trying to make sense of charts like this.
Yeah. So, I mean, the volatility as opportunity is more a comment on the trends and how, I guess, high beta, in a way, crypto can be relative to other asset classes that have been around much longer. And it's that way with still like pretty good liquidity, right? So, oftentimes you'll have less liquidity when you're looking at something that is, exceptionally high beta. So that's one way to look at it, and that would be, I think, at this time more of a positive. If you were to look at the BVIV, so I see that as just like the VIX for Bitcoin. It would be more of a gauge of sentiment in our work. We like to look at volatility via the VIX as a sort of a transactional sentiment gauge. Like, how are people feeling about this asset at this moment? And not only how are they feeling, but with that in mind, how are they positioning, right? Are they positioning for more upside or downside? And that will show if obviously they're worried about the market or not. And where that sends a message is actually when it's at big extremes, right? So when it's just kind of like floundering, just kind of hovering, it doesn't really have a powerful takeaway, but it does when you get these extreme readings. I would argue that the BVIV, which I'm not that familiar with, but it's not that extreme at this moment. If anything, it would show maybe some complacency, but that doesn't make a whole lot of sense after a downtrend. So it would be, I'd say, slightly less worrisome in terms of a complacent reading for that reason. Like if you saw a low reading, after a big run up, that would be a bit more concerning.
Yeah, yeah. I've been trying to look a little bit into the reasons for the depressed BVIV, or devol, which is Deribit's like version of the VIX. There's a couple of them out there. I know the put call skew is still like relatively elevated. Like people are still kind of protecting from the downside, and there's a bit of a narrative. I'm actually curious your thoughts on this. That like the days of like the 10x, 100x returns on Bitcoin and the, I guess, associated assets is over because it's become institutionalized. Is that something that you agree with?
Well, I think like becoming institutionalized, it can also be looked at a couple of different ways. But when I say it, I'm talking about more the uptake from asset managers and not small ones, but the big ones. So once we see that uptake, to me, that's where it also has that institutional sort of interest on as an investment, right? So I don't think we're there yet. I think we actually have a really long way to go to get to the place where ultimately it should be or could be. So there's more institutions trafficking in it, but it's not in the way that I think will necessarily contribute in a way that will minimize that volatility or tamp it down to a huge degree until we have that sort of buy-in from large institutions. So that's one thing. But year over year, I mean, listen, we have seen, as just the asset class has been around longer, less volatility. So I think just by the nature of being around longer, to sort of oversimplify, people get more comfortable with it. I think I still get questions on, well, what happens if it's all a farce and it goes to zero? So the longer that it doesn't do that, or something, extreme like that, I think the more and more, sort of normalized the trends will become. So you've seen that already in the kind of the return streams to a degree. But to me, there's still a whole lot of volatility to take advantage of. But then also the longer term, that secular uptrend is established, right? We have a series of higher highs and higher lows, even though these cyclical down moves can be really dramatic.
Yeah. Okay, that's a good way to put it. All right, so let's wrap up here. But before I let you go, I'd love to know if there are one or two tokens that are maybe a little under the radar that people should pay attention to, that you're keeping an eye on. And you don't have to answer the second part, but if there's one or two that you think people should be bearish on.
Yeah, well, I mean, I guess we'd have to focus on Ripple as the more bearish setup. We actually really focus primarily on Bitcoin and Ether in our work because we feel that it is the most institutionally relevant, and we want to make sure that there's liquidity that we're comfortable with, market cap in a way that we're comfortable with. So we focus primarily on those, and we feel that again with these signs of downside exhaustion longer term, that people should be sort of woken up right now to this improved momentum and ready to put money to work in the broader space. So we found in building the model for our BNAV ETF that we didn't derive a lot of value from going down deeper into these altcoins without adding much more risk to the profile of the strategy. So we found that trading Bitcoin for our purposes was really ample, and that's where we focus.
Okay. All right, great. Well, where can people learn more about your research or yourself if they want to follow what you put out there?
Of course, yeah, as a place to start, our website, fairleadstrategies.com. They can receive a sample of our cryptocurrency research there. They can find more information about the two ETFs that we manage and just generally speaking about our methodology. We also have a Twitter account or X, which is at Stockton Katie, and people can find us that way too.
Right. It will always be Twitter to me. Well, with that, Katie, thanks for coming on. We'll have to have you back sometime soon. Hopefully the market's a little more volatile. And thank you to everyone for watching and listening. This will actually be my last show for a couple of weeks. I'm going to be on vacation, but we'll be back in the first week in September with another exciting guest.